Hello, everyone. Welcome to yet another episode on Stockertim. Welcome to Stockertim, the investors channel. On this episode, I really want to talk about another IPO that is being planned, but there is no specific date, and it's none other than the Databricks IPO. Databricks, a data lake, data cloud, data platform, and also analytics platform is has been talking about going on IPO for a while now, but there's no concrete plan as to whether this IPO will happen this year. But should in case Databricks go on IPO before the end of this year, what exactly should you be expecting as an investor? Is this something you should be investing in? Should you wait for this stock to pull back, or maybe after the lockup period, or is Databricks really offering anything different from what some of its competitors are offering? We'll be talking about all of that on this episode. Before we go further, every information shared on this channel is for education and information purpose only. Do your due diligence or consult your financial advisor before making any decision. On that note, give this video a like, subscribe to this channel, and just to also let you know, this episode and every other episode is proudly presented by Stockertim.com, the platform for retail investors to get information, data, guidance, and coaching. And you can check out Stockertim.com. We'll also be looking at what exactly how Stockertim.com allows and also helps retail investors looking at fundamental ideas to invest. Let's jump right in. So the first thing I'm going to be looking at when we are looking at the Databricks IPO is to actually look at what exactly is Databricks, what does Databricks actually offer that is pretty much different from what the likes of Snowflakes, what the likes of even AWS actually offers, and we'll look at the competitors. What exactly is Snowflakes? How are they necessarily different from Databricks? Are they direct competitors? And if Databricks is coming to this market, what valuation should you be buying? What valuation is too much? What valuation is too small? So let's look at Databricks in detail. So, what exactly does Databricks actually do as a software company? Databricks offer that cloud data plus AI kind of offering, that lake house where you can store all the data, you can clean the data, you can organize the data, and you can then feed the data to any analytics platform, maybe e.g. Palantir, for real-time decision making. So Databricks doesn't necessarily do exactly the same thing that Palantir does, and that was the confusion, or that's the confusion I see, amongst a whole lot of retail investors who like investing in software companies like Palantir, like Snowflakes, like even CRM, which is Salesforce. But at the end of the day, you really want to be able to differentiate what Databricks does. If you don't necessarily understand what this company actually does, what makes them distinct, do they have a moat in what they do, it will be very difficult for you to actually make an informed decision as an investor. So they basically provide that platform for data engineers, analysts, and machine learning experts, data scientists. This company was founded by Ali Goshi, Mate Zahira, and a few other co-founders. The early backers of Databricks are Jason Horowitz, very popular, on Wall Street, BlackRock, Quatu, Fidelity, Tiger Global, and a few others. If you also look at this retinue, this list of backers for Databricks, you could actually see that these are some of the most credible investors. Look at BlackRock, for instance, the largest fund manager in the world. So perhaps they've seen some substance in Databricks. Are they always right? No, but that gives you an idea of who exactly has been backing this company in terms of how they've been running. They've been burning so many cash. If they've committed this amount of money, have they seen something very worthwhile that makes Databricks to be very compelling as a business to back? If you see the kind of rounds, fundraising that Databricks has done in the last couple of years, the company has now been valued at about $100 billion, which is my private market, valuation. Private market valuation oftentimes is always at variance with public market valuation. Public market valuation takes into cognizance so many things that in private, a whole lot of the disclosures, a whole lot of the even how the business is being run, your margins, everything is actually calculated to the last detail. And so companies who are valued at 100 billion, for instance, Databricks, might actually come to the private to the public market, and they find out that the public market is not even ready to pay 50 billion as evaluation. If you look at the business scale, really, Databricks claimed and they reported about 4 billion revenue run rate for full year last year, and they have thousands of customers. So this is another differentiation between Databricks and Palantir, which they are not necessarily competitors. Palantir doesn't necessarily just make money from commercial software, commercial data analytics integration that they offer. They make so much money from the defense side of things, from government side of things, or the PG. So Databricks basically has thousands of customers, and these are almost virtually commercial customers. So it's a commercial software that is being used to actually organize data, to clean data, to actually manage a whole lot of data before you actually use data for decision making. The pros for me, really, number one, they have a good growth rate. At least if a business is already making an annual revenue of about 4 billion and they're still private, that's not really bad. As a matter of fact, that's very impressive. With the little experience I have investing in software companies, the large scale enterprise customer base that they have also makes a lot of sense. If you look at the list of this customers that they have in the enterprise business that they do, the Burberry, they have the FDA, Michelin, Mercedes Benz, ND, MBA, AT&T, Santander. So a whole lot of very very reputable clients actually use Databricks to actually do their data operation. But for me, one of the red flag, which is not necessarily a huge red flag, is the private market valuation that this company perhaps will want to actually come to the market to list at. I don't necessarily believe Databricks will look everybody in the eye in the public market and claim they want to actually list for 100 billion. I don't necessarily believe. I believe this will be revised downwards to the region of about 60 to 80 billion dollars. But let's see, anything is happen is actually possible on Wall Street. Another thing I will also want to touch on is actually the fact that the margin for this business might be a bit cutthroat. So Databricks doesn't necessarily operate an hyperscaler or data center kind of operation. They depend very very heavily on the likes of Microsoft, the likes of Amazon, Google Cloud, Salesforce itself, and even the large language model operators or companies, AI companies. So a whole lot of the expenses, capital expenditure for this business goes into feeding a whole lot of the expenses they run on the cloud and data center infrastructure of these hyperscalers. So at the end of the day, the cost and the margin for this business might be a very very tough one for them to not just break even, but to maintain a growth rate, not just on the top line but on the bottom line, because that's what fundamental investors like me actually look at. So that might be something to really really look at. So in terms of competitors, I'll be going to the major competitor for Databricks, but before we get into that, Databricks itself has a retinue, a list of competitors from Snowflake to Amazon Web Services itself, because AWS actually has what we call Redshift, and Google also has BigQuery or Vertex AI. Amazon Azure, they have Synapse, and Cloudera itself. So Cloudera is also another competitor to Databricks. So at the end of the day, the biggest competitor that stands very, very distinctive from the likes of the big tech giant like Amazon, Google, or Microsoft is actually Snowflake. I'll be looking at the chart of Snowflake to really give us an instructive idea of what I actually think this IPO might actually play like, what this company might actually even trade at maybe 8 months, 2, 3 years after the IPO, if it eventually happens anyway. I will also want to touch on the key risks. So I've mentioned the hyperscaler cloud cost that this business actually incur, a huge ton of the money that this business actually collects from customers. A huge part of this money actually goes into the hyperscalers, which is going to be very, very big challenge because most of these hyperscalers are now deploying most of their capacity into AI data centers, and the cost of energy keeps rising. If the energy provision or the cost of producing the energy that powers these hyperscalers doesn't necessarily go down, so that is really, really a big headwind for this business to even be profitable in the first place, or to even be able to maintain a healthy margin where they can actually now raise up their valuation. Intense competition, Databricks competes with the likes of Snowflake directly, distinctively, but Databricks still has mega tech giants like Google, like Microsoft. They still compete and still offer maybe better products compared to what Databricks offer, and they still sell their own product, which is their infrastructure, to Databricks. So sometimes it might be mind bending, but it's very, very simple. So if a Microsoft can still do the same thing that Databricks can do, they still sell. So they actually make money both ways anyway. So like I said, that competition is a very, very big one. I will touch on the execution risk. I haven't seen a very, very strong execution from Databricks compared to what the likes of Palantir has done. Yes, they might not necessarily be offering the same value. They might not necessarily be doing exactly the same thing, but I haven't seen that very, very agile innovation from Databricks. I stand to be corrected anyway, but I haven't seen it. Is this because they are in the private market and they don't necessarily do a whole lot of PR? They don't necessarily do a whole lot of engagement like what public companies would do? Is yet to be seen. The last one I will also want to talk about is the regulatory AI governance, and Databricks really, really needs to also invest so much in cybersecurity. They don't want to get any negative PR that shows that the data being stored on Databricks cloud, on Databricks lake, data lake, is compromised. That is actually going to be a major blow to a very, very fragile business that is not yet having that very, very strong image, very, very strong reputation. They have that reputation if they can work with some of these big companies, but it's yet to be seen. Are they able to maintain? Is this business even profitable in the first place? Not necessarily, based on what we can see. I'm going to close on this note, and I'll take you to the chart of Snowflake for you to actually get an idea of why this valuation at 100 billion might be very, very far-fetched, and it might be something that, as an investor, before you actually plan to even invest in this IPO, when it eventually starts or even announced, you need to actually be aware of what you're getting into. Come with me. So here is the chart for Snowflake, which is the de facto direct competitor to Databricks. As you can see, the all-time performance of Snowflake. As a matter of fact, if you have invested in Snowflake since 2021 or late 2020, when this company actually listed, you haven't actually made anything. As a matter of fact, you only have your capital with you. Yes, the stock has really surged, a few moments down the line, a few, as a matter of fact, the stock has really, really been battered several years, several months since it's gone into the public market. Like I said, the public market will always really, really reveal so many things. The public market revealed that Snowflake had so much debt in its balance sheet. And that's the challenge with companies who stay private for too long. They hide so many things, not necessarily for the wrong reasons, but because they don't necessarily have that obligation to disclose anything to you and I, retail public investors. They only have responsibility to their investors and partners, so they wouldn't be showing us all of those not too good side of the story. We'll only hear the good side. But when you come into the public market, you are actually obligated to share everything and everything in the open, and you have to be transparent as possible. So you can see the whole major gain that Snowflakes has gained in any time over the years that is listed has been just this year, because they've been trying to actually make sure the business reduce its debt overhang, the business become more profitable. They are not yet profitable, but you could actually see that. And now Databricks is valued at 100 billion. They are still private. They are still making far, far less compared to what Snowflake actually makes in revenue, and they are valued at about 100 billion. Snowflake, as we speak, is valued at about 81 billion. Look at this way. When Snowflake actually did their IPO, they valued themselves at around $70 billion. And since then, Snowflakes has not necessarily gained more than maybe about $10 billion, from that time. So that's what we are going to be looking at, for Databricks. Do you actually believe that Databricks is worth 100 billion? Is this part of the AI hype, AI bubble, where a whole lot of these companies, because they are still private, they get higher valuation? A whole lot of these companies in the public markets as well, they get much more higher valuation. Is this part of the AI bubble, and that's why Databricks is being valued at about 100 billion? It's yet to be seen, and that's what we have for this episode. Do you actually think that Databricks is something you should be investing in when this IPO comes to the market? And that's why we will be talking about, just before we round off, Stockertim.com is the platform, the go-to platform for you as a retail investor to get the due diligence, the coaching, the guidance. You get much more in-depth analysis. If you are a fundamental investor, you get what I call the daily brief every 3 days in a week, Monday, Wednesday, and Friday. And this briefing actually gives you a bit more rounded, more detailed, idea of what exactly is going on in the stock market, the stock picks that we have. You also have access to, the news. You have access to a whole lot of market moving news. And that's why you can join our community. You can join to be a member. You can go to the membership and see all the membership plans that we have. That's everything we have for you on this episode. If you are going to be investing in Databricks, look at all of this, do more due diligence, and should be able to actually make up your own mind. Thank you. Take care, and bye-bye.